The ticker flashes on screens across financial terminals and retail brokerage apps alike. Lithium Americas Corp., trading around the $3.38 mark. To the casual observer scrolling through stock forums or glancing at financial television during a market lull, it looks like just another speculative junior mining casualty. A beaten-down pre-revenue exploration play caught in the crosshairs of a brutal cyclical commodity downturn. For months, retail sentiment has swung wildly between exhausted apathy and outright frustration, with message boards filled with commentary about prolonged dilution, delayed timelines, and depressed lithium spot prices that have crushed valuations across the entire green energy complex. Standard financial media treats the asset with a shorthand narrative, a high-risk bet on an electric vehicle transition that feels perpetually deferred, bogged down by permitting delays, capital expenditure hurdles, and an oversupplied global market dominated by international players. But beneath this superficial layer of market noise lies a profound structural disconnect, one that completely misses the geopolitical reality, the physical chemistry constraints, and the hard-edged strategic architecture governing the future of North American industrial sovereignty. While retail investors fixate on short-term price drawdowns and daily volume fluctuations, institutional heavyweights and sovereign entities are playing an entirely different game, one dictated by national security, supply chain weaponization, and the raw physics of mineral processing. The market is currently pricing Lithium Americas as if it were an ordinary commodity extraction company vulnerable to the whims of spot market cycles, completely overlooking its status as a foundational sovereign asset. We're looking at a fundamental engineering and geopolitical bottleneck, the absolute scarcity of domestic, battery-grade lithium processing infrastructure capable of feeding the Western electric vehicle and grid storage supply chain without relying on foreign entities. The real story here isn't about whether lithium prices bounce next quarter. It is about the physics of extracting high-purity lithium carbonate from the unique claystone deposits of the McDermott caldera in northern Nevada, and the extraordinary strategic lengths to which the United States government and multi-billion-dollar automotive giants are going to secure that supply. Are you currently holding shares through this volatile construction phase, or are you sitting on the sidelines waiting for mechanical completion milestones to approach? Let's dive deep into the mechanics, the operational reality, and the future outlook of Lithium Americas. To truly grasp where Lithium Americas stands today, we have to strip away the outdated framing that lumps it in with traditional mining stocks or speculative junior explorers. Historically, the mining sector has been viewed through a cyclical lens of boom and bust commodity pricing, where companies discover an ore body, raise capital, dig a hole, and pray that global market prices cooperate when the product finally hits the market. That old playbook is entirely obsolete when applied to the modern strategic mineral landscape. Lithium Americas is not just digging dirt, it is engineering a massive vertically integrated chemical processing facility designed to bridge the gap between raw geological deposits and advanced battery manufacturing. The company's crown jewel, the Thacker Pass project in Humboldt County, Nevada, hosts the largest known measured and indicated lithium resource in the United States, locked not in traditional hard rock spodumene or South American brine flats, but in unique lithium-bearing claystone. This geological distinction is crucial because it changes the entire operational paradigm. Extracting lithium from clay requires a proprietary, highly specialized chemical processing flow sheet rather than simple crushing or solar evaporation. Over the past several years, the company has transitioned from conceptual design to tangible physical reality. Construction progress at Thacker Pass has steadily moved vertical, with processing plant structures rising, heavy long lead equipment arriving on site, and the technological validation processes running through their state-of-the-art Lithium Technical Development Center in Reno, Nevada. The historical narrative used to be centered around permitting uncertainty and legal challenges. Today, those hurdles have been systematically cleared, replaced by the relentless, capital-intensive engineering execution required to bring Phase 1 to mechanical completion. The contrast between public market perception and operational reality couldn't be starker. While retail traders stare at depressed equity valuations and quarterly burn rates, the company's operational blueprint is methodically advancing toward a targeted mechanical completion window in late 2027, followed by ramp-up in 2028 and full production capacity heading into the decade's close. Phase 1 alone is engineered to produce thousands of tons of battery-grade lithium carbonate annually, positioning the asset to become a cornerstone supplier for domestic automotive manufacturing. By transforming raw clay into high-purity chemical compounds required by modern cathode and cell producers, Lithium Americas is carving out an unassailable defensive moat. They aren't price takers in a volatile global commodity market, they are structural gatekeepers of regional energy independence. Looking ahead, the multi-year catalysts driving Lithium Americas are deeply intertwined with the broader macroeconomic and geopolitical shifts reshaping global supply chains. The capital expenditure cycles of mega-cap tech spenders, traditional automakers, and energy infrastructure providers are all converging on a single bottleneck: the security of raw materials. As vehicle electrification and massive grid-scale battery storage installations expand to support surging energy demands, driven in part by the explosive power requirements of modern data centers and artificial intelligence infrastructure, the structural demand for lithium remains on a steep upward trajectory over the medium to long term. Regardless of temporary spot market fluctuations, the company's strategic partnerships provide a formidable financial and operational shield. The multi-tranche investment from General Motors not only secures a multi-year offtake agreement for the entire output of Phase 1 production, but also aligns the company's success directly with one of America's largest industrial heavyweights. Furthermore, the strategic involvement of the federal government via structured financing and direct equity alignment vindicates the project's vital importance to national security. In a world where critical mineral supply chains are increasingly subject to geopolitical friction and export restrictions, having a massive, fully permitted domestic source of lithium located squarely within the borders of the United States is an irreplaceable strategic asset. Of course, navigating this path is not without its risks. The road from heavy construction to full-scale commercial production involves complex engineering execution, capital management, and inflation variables that can impact total project costs. Commodity price volatility can also create emotional turbulence for public shareholders who lack a multi-year horizon. However, these very risks are what create the profound market mispricing observed today. For investors capable of looking past the short-term price noise and understanding the macro-engineering reality of the energy transition, Lithium Americas represents a rare asymmetric opportunity, a foundational infrastructure asset being priced in the public markets as a speculative afterthought. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any financial investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.